Very good evening, and thanks for attending for today. So, great presentation, both the companies before us. So, I am Ankur Ghosh. I am the founder and CEO of SSV Capital. It's a very new company with some new concepts coming within the open banking, as well as the PropTech and the real estate side of business. So SSV Capital was founded by myself and my wife, Bishita. She is not here at the moment, but we have got our head of corporate development, Nidhi Pandit. When we established the business, we wanted a clean asset management which is disruptive by nature. Now, when I say disruptive, it could be disruptive on the fintech, on the PropTech, and on the fund side of things. So last 2 years was all about research and development, how we would penetrate into the market. So we at the moment, we are headquartered here in Canary Wharf, but we are also have our division there in India, Australia and America, and that's where we are moving our real estate as well as our fintech opportunities. So that's the company logo. We believe in the engagement, agility, and excellence. This is a company overview, which suggests it's a disruptive multi-class asset manager headquartered in London's financial district. And we have a sustainable P bottom line, which is planet, people, and prosperity. So everything we do, if you look into our website, we are doing it for building a better tomorrow. Right? Whether it's the payment procedure, whether it's term investments in commercial properties, or even the sustainable funds which we are launching in Luxembourg. So we have a triple P bottom line of people, planet, and prosperity. And we also look into investments, but we look into impact investments. So me as a founder and CEO, if I'm raising any cash, when investors, we deliver the returns, it's not about delivering the returns to your investments, but more importantly, what impact has that made for an investment? So it's very much a profit-driven company, but we also have the planet and the prosperity side of things. So this is obviously, again, coming back to the philosophy of the company, key research and development. So we have got our own investment banking division who does the equity, the corporate finance side. So we look into the market and we bridge the gap in between the market in any kind of industry sectors we come in. So excellence in investing, effective communication. So the most important thing is when asset managers do raise money, they don't have a clear understanding between the investors or between the company. We have set up a division, and the customer or the investor journey, whether it's an investment, whether it's downloading the app and using our fintech, or whether you're bonding yourself for the fund or PropTech, everything should be very clean and clear. Diversification, and most importantly, the sustainable side of the business. Now, the business roadmap, as you can imagine, the investment verticals we have. So the company is sectored in 3 different asset class. The first one starting in banking and fintech, PropTech and real estate, and SSV funds. And that's basically a clear business roadmap of what we have done and where we are going for an exit with an investor confidence with the return on the balance sheet. Now, financial projections of SSV Capital. So the first sector, as I say, I would like to take this opportunity to introduce SSV SmartPay. So what exactly is SSV SmartPay? Now, in today's day and world, we have always been using, I'm just talking through Statista, 84–86% of the population here in UK are using their debit cards. Right? And when they're using their debit card, they're automatically using Visa and MasterCard. Great companies. They have been historically very, very successful. However, the problem statement comes with a merchant. If you go to a merchant, maybe an off-license shop, right, a corner shop, they will see that they will start using a POS machine with a subscription, and then there is a Visa, which is a transaction charge, or a Master transaction charge. So basically, historically, if you see merchants currently are paying between 1.5 to 2.5% of the transaction plus a POS terminal cost plus the subscription. So generally, if you look into the huge market side here in UK, we are talking about 26 to 30 billion transaction every year. And we are talking about a market size of nearly 800 billion, right? But what we are forgetting is a gift which was given by Bank of England back in 2017-18, something known as open banking. A lot of you probably be using it. So the percentage growth in using the fintech solution, if you go to see, every year is by 61 to 71%. But if we can use the open banking technology to make the same payments by kind of avoiding Visa and MasterCard, we can take target audience under the open banking framework. What does that mean? At this moment of time, open banking, if I can have this, we are only using 13.6 billion at the moment. UK in open bank is using 13.6 billion. Globally, they are using 57 billion. Now, if you look into this slide over here, 2023, Visa debit cards, they're about 800 billion. Like I'm talking about the debit card facilitation, the Visa or the MasterCard. I'm just not going against one. I'm just talking about the system, right? Can you imagine the market huge spread? So what we at SSV SmartPay is doing, we are developing the UK's, or rather we have developed and we have done a soft launch. My soft launch was at House of Commons, 24th of November. We have developed a QR-based payment technology which uses open banking where merchants can reduce their cost by up to 70%. Which means now where they were paying, just imagine this, 26 billion transaction, 800 billion, right? If we can scale that up even by 10%, where could the market size be in fintech? And we have the first market mover potential advantage. So we have understood the gap in the market, because ideally I was coming into a neobanking services, but then when we did our research and development, we saw there is a huge payment flow, and the payment flow was coming under the debit card, right? Debit card was charging a lot of money. It's the same concept I keep on telling my team, the Kodak and the Sony story. Kodak, 1995, 98, my father paid a lot of money in buying the negative rolls to take my pictures. I don't know how great they were. But if you go to see, Kodak was investing at that point of time in chemical engineering, whereas Sony was investing in digitalization. Exactly the same concept. Visa and MasterCard today, if you look into Apple, right? Everyone in this room probably use an Apple wallet. Do you know, Apple is the first company to go into open banking that even clears our set rule. So what I'm trying to say over here is, by using this open banking framework, we can reduce the transaction fees, not only for the merchants, but we can bring a loyalty program for customers, peer-to-peer transfer. And how we are getting on the next stage is we are also introducing e-wallet, cross-border transaction, and banking as a service option. So SSV SmartPay, we want to work as a banking as a service, so we are reducing the transaction, increasing the loyalty, and even if we take the 10% of the market share, I think this company can really scale up. Every founder and CEO's ambition is to exit at $1 billion. Our goal is not exit. We have to have this company all within, and we scale it up. In India, we are also trying to launch something known as neobanking services, which is also very new over there. But QR payment is the maximum force what we are giving here in UK, after which we are also expanding into Europe, right? Yeah, that's all about SSV SmartPay, which is the first market sector in banking and fintech. Therefore, we go into real estate. Everybody likes commercial properties. Certainly, they love investing in commercial properties as well. Now, as per the research JLL had made, 60% of the carbon emissions are for commercial buildings if you go to see, right? Mainly in US, London, Paris, and over other 29 cities. So what we are doing is we now bring the concept of ESG, we bring the concept of net zero, and we are doing an investment with a PropTech platform which starts with as little as 10 million. And what we do, we use an LBO model and we forecast. I mean, if you generally go into commercial properties, you would get a yield between 5 and 7% as per Statista or PwC potential. Over here, we can afford to show you 10 to 12% returns through an LBO model. And there is also an arbitrage to it. For every pound, there would be a potential 1.9 times of your investment valuation. And that's the market size again. That is the market size. So if you look into, we are doing commercial properties not only here in UK, but also in America, India, Australia at the same time. And these are the demographics of it. So generally what we are aiming is every 7 years, we are potentially aiming to double your investment strategy under commercial properties, but that's under SSV Real Estate. And I'll come in a second how we can do that. The final factor is funds. Obviously, every business needs its money to grow. Certainly, fintech is a huge cost burner, so as real estate to start with. But we will come with the CAGR growth towards the end of the slide on the consolidated model. We are launching, therefore, a 50 million fund in Luxembourg. The reasons, there are certain reasons why Luxembourg. And if you look into the last scale over here, so the targeted market is over, if you go to see 3 trillion or 3,000 billion or 4,000 in 1,000 in sustainable things. So Luxembourg was only, not in regards also to the tax treaty. We are not talking about tax over here, I understand that. But again, not only in regards to the tax, but also in regards to the sustainability, Luxembourg was the best. And if you see the market comparison between UK, Switzerland, Germany, Netherlands, and France and Iceland, you will see Luxembourg being the best market leader. So we are an investment manager over here. We have our general partners, Killa, who are based very much in Luxembourg and Netherlands, and we together are forming this fund. In terms of value of the funds, again, it would be a strategic 5 plus 1 plus 1, and we are aiming to double the money through our fintech and our potential PropTech platform. AIFM is a huge market. If you go to see, a lot of investors are coming into alternative investment fund management, because if you go to see, the normal kind of investment is not proving to be absolutely exceptional. I'm not going against them, but what I'm trying to say, AIFM is a deep well, and we want to all dive in this deep well to have our thrust gone, because the market rate returns is huge. Coming back on the consolidated statements, in SSV SmartPay, we are seeing a CAGR or a CAGR growth of 30% year on year, and that is increasing by 50% every year. Please remember, the market size is huge. We are talking about 800 billion. If I take you back to this slide one more time, if you go to see from year 2023 to 2027, the Visa or debit card, they're only increasing by 1.5 to 15% a year. However, if you look into the banking, open banking side, you see how much growth they are looking into. So if we can change certain ways in the software which we are launching under SSV SmartPay, and even if 5% of the entire market share starts using it, that itself makes its own revenue. So even I can run through some stats, like even if we take 1% of the market share, which is historically no company aims at, historically, even if I take 1% of the market share, your EBITDA is over 32%. So that being said, that research was done, hence the cumulative SmartPay, we are looking at a CAGR rate of 30%. PropTech, therefore, we are looking at a 13%. And on the fund side, we are looking 32%, yes. Well, so I got confused with the CAGR of SSV. So SSV Capital, if you go to see, the market size is huge. We are going into investments into specific sectors, but not only specific sectors, we have gone into specific downstream, like fintech is a huge thing, but we have understood the gap in the market, and therefore we are delivering that gap in the market and being the first market mover. Same thing in commercial real estate, same thing again in the fund. So we are doing something which probably will make some disruptions, and probably it will be a pocket-heavy investment with an impactful returns. That's the most important aspect. The CAGR rate for SSV, therefore, is 29%, which is generic. And we are raising, I mean, we were backed up by VC, can't name their name at the moment, but again, we are doing certain private placements over here at the moment with 2.5 million in equity, 2.5 million in debt. And therefore, these are our investment procedure. If anyone wants any more information, please feel free to contact Chris or come to our website. We have a great team of investor relation, all sits in Canary Wharf, great to talk to, and we can go through it, right? In regards to the sustainability side, so this is all about the profit side. In regards to the sustainability side, I would like Nidhi, if you can tell a little bit more about the net zero. It's not about delivering the fintech opportunity. More importantly, is delivering a net zero, because the entire dimension of SSV is about building a better tomorrow, right? Not every time on the profit side, but sometimes more importantly, what we are bringing back to the planet, how we can help the mother nature. Nidhi, do you want to talk a little bit more on starting with the smart pay?
So from an SSV perspective, SSV management has embedded the entire environmental values into its core processes. And that is what is being reflected in each of the segments that we invest in. So for example, the first one is SSV SmartPay, which is our banking fintech sector. So if you look at it, what our aim is, at this point in time, we have invested completely on the digital platform. So that is one immediate step towards the sustainable opportunity. And from a long-term perspective, we want to become an ethical bank. And we are doing simple things like carbon tracking, rewarding customers who are actually doing transactions which are carbon friendly, so that we have a full-fledged ethical business around banking fintech. If we look at PropTech, which Ankur has also explained, that we are looking at all the investments in the commercial property which are sustainable buildings, and that is what is an upcoming trend or upcoming requirement. I won't say trend, but rather a requirement in the current world. If we look at funds also, the entire 50 million will be deployed in fintech and PropTech funds, PropTech companies which are in the sustainable sectors. So that is one of the main investment criteria that we have built in. And the reason why sustainability is becoming our main, one of the main parameter, is because to create a long-term investment value. Because we know that the long-term shareholders value which is even us, will only come if it is in the sustainable environment, which we have now a lot of examples to prove that. So that's about it about sustainability. And yeah, would you like to add anything?
I think that's the end of investor proposition. I think we have got 2 minutes left. That's our profit for the evening. So over to question and answers.
Okay, thank you.
Thank you, sir. Do you want to sit down?
Any questions from the audience at all, please? This gentleman here, please, Atel. Thank you.
A quick question regarding your SSV Pay.
Yep.
I can see how merchants would be interested in it because they pay lower fees, but I really don't see how a retail buyer would be interested in it. I mean, if I use Apple Pay or Visa or MasterCard, these are very, very deep brands that I trust. And plus, I get quite a few perks with a number of them, you know, cashback and things like that. So what would entice me to use SSV Pay?
Actually, I tell you honestly, the answer lies to your question, right? And I'll tell you why. Let's put it this way. You have walked to a merchant, right, who is now introducing an SSV Pay, which is obviously economical. He's just showing a QR-based payment technology, and you are just making the payment through. He's saving money, what you are. But what happens if the discount comes back to you? So what in one of our loyalty program is, if you use the SSV SmartPay, and I mean, our marketing partner was Apino, just Google Apino, they are really big. And when we went for our market transition, we have developed a merchant interaction with us, such as when customers come and use it, you would get based on the loyalty program, not generally a cashback, but it could be a combination of everything. So in other words, let's put it this way, for every £100 you spend, you get not only a cashback which is limited to 0.25%, but more discount going back to the shop.
So if I can add to that, so there are two folds of discounts that we can now see from a merchant coming from the overall ecosystem. One is going to be the merchant, the overall cost reduction because of the reduction in their cost of 1.6 to 0.7%. And the second would be on the consumer, or rather our ecosystem. When you use our system on our when you use our systems on any of the merchant platform, we will also provide you with the discounts and coupons, codes, and other things. And how you'll get the funding for that is primarily the customer acquisition funds that will be coming from the merchant side. Right. So that's how we see the whole ecosystem.
But I'll play devil's advocate a bit.
Sure.
The fact that Visa and MasterCard and Apple Pay take a much bigger chunk, they have a lot more pricing power, that if they see you, a newcomer, providing discounts and so on, they can provide much bigger discounts because they're much bigger margins.
So first, let me answer and then you can add.
Yeah, we are very interested to answer that.
So basically, first of all, the market is big. So there are a lot of players that can come in and play. It's not only about a MasterCard or Visa. Second fold is about the local government push. It is not just that open banking is a platform that has been developed by the FCA, or the government is actually, central banks are actually pushing it, similar to what India has developed its own local switches, because nowadays the international switches are really costing heavy on merchants as well as the governments, and a lot of movement of the money is happening. So to curb all of that, there is a government push. And the third one is that I would say that yes, they can provide us much if we provide convenience, and there is a push from the merchant side to the consumers to actually use this platform, then it becomes much more beneficial for us, unless you want to add something.
No, again, the answer lies in open banking, right? And the costs involved into it. Who is at power? Is it Visa, MasterCard? They are just, again, nothing against them, right? I'm getting shot. Next moment, I get a letter from Visa and MasterCard. So basically, the entire fundamental lies on the open banking. Every government, if you go to say, Indian government UPI, Chinese government, everybody has their own way of making the payments. Government has introduced open banking. How many smart people has looked into it? Not saying I'm smart or we are smart, but we have developed an idea to be smart, to make that ratio in. So who is powerful over here? The powerful person is the merchant and the customer. It should be an interaction between a merchant and a customer. Let me ask you a question, sir. If you have to pay one of your friends, how do you pay him? You pay through open banking. Let's assume you use any high street retail bank. Today, if you go, you will see add another bank account. What is it? Open banking. But then you would say, why would my Lloyds Bank want to add my HSBC account? Because banks are interacting between each other. If you give their account number wrong, you sort code wrong, what happens over there? Right? It automatically rectifies. Everything is open banking. So we are a smart disruptor using that open banking facility. Now let's put it this way. You go to a merchant, like let's assume I'm a shopkeeper, I do £10,000 worth of transaction. Now, before I was paying £500 a day, let's hypothetically say that, but now I'm only paying £100. Who does the discount go back to? Customer and the merchants. But the adoption of the customer to bring the commercialization back to the market, it will take, that would be challenging. The concept is not challenging at all. The concept is very easy. UK, we are only using 13.5 billion. That's really, really low. If you go to see, rest of the world is huge. So we are bringing that concept, and please imagine, there's 13.5 billion to 800 billion. Visa and MasterCard can't do that is because they don't use the open banking framework. They have a completely different model of working. And that's why I told you about the Kodak and the Sony story is when Kodak was investing in chemical engineering, Sony was doing in digitalization. And I don't know what the future in the next 5-10 years would be for Visa and MasterCard. And when you talk about Apple Pay, Apple actually doesn't pay. You have an Apple wallet. And that wallet has those debit card or those credit cards.
So eventually it goes again to the Visa and MasterCard.
Visa and MasterCard. So what we are building is an innovative platform using the open banking framework. You can make the payment through your debit card facility. Sorry, I'm too excited now. You can make through your debit card facility. More importantly, we are also bringing an e-wallet facility. You can download through our IBAN. You can make your own bank account. You can make a regulatory IBAN. You can do a cross-border payment. So what we are trying to do is being a one-stop solution for you for all your payments needs, whether you are paying a bill, whether you're a supplier, you are invoicing and you want a bulk payment. So it's not only about the QR side of payment technology, it's more about the open banking. So if at all anything, we are selling open banking than our product. And that's how I think we are getting the push from Bank of England, or we are getting the push to get it to the massive population over here to use those products and services, if that answers. Thank you, sir.
Thank you for explaining that. Thank you. I've got a couple of questions for you.
Yes.
Are you generating any revenue at the moment, and do you have any debts?
Okay. Generating revenue. So we are a very new company. So SmartPay has just launched. So over the next 12 to 18 months, yes, we are looking forward to generate revenues. How much? It's quite a big number as per our forecast. And therefore, if you look into our CAGR rate, we are growing by 30%, right? And what was the second one?
How much?
Debt.
Debts, yeah.
Debt. Okay. So we are raising, we don't have debt as such. We are a pure play company. Majority of us has come from the founding members, and we were backed by certain big companies. But now slowly we are coming and we are downstreaming towards ourselves. In terms of SSV SmartPay, no, we don't have any debt. It's a crystal clear company. SSV Capital is funding it. More importantly, when we are raising the 50 million, which we should be able to raise within June 2024, these kind of investments specifically is coming to our fintech and proptech. So the entire channel is we are making a company all for ourselves, all for our investors. So SSV Capital stands over here. We all invest, we are all shareholders, we all have the profitability within us, and then it downstreams to our fintech and the proptech, and everything goes back to SSV Capital as such.
So how much capital do you have access to?
A few million, 3.3 million at the moment, if I be specific.
Okay. Any other questions from the audience, please, at all? I'll carry on then.
So we have a huge, the most important thing, we have a good cash runway.
Yes.
Fintech game is also a bit of a cost burning thing. I mean, the cost burning could be huge with the open banking platform, with the networking, the compliance and regulation, but we have a huge cash runway for it.
Having said that, the capex may be high, but OPEX is not, because the running expenses will not be high for the
Correct.
fintech.
Correct.
Okay.
Business.
Correct.
So, this gentleman here, please, Atel. Do you have a UK banking license, and is it regulated by the FCA?
Yes, sir. Yes. Yapley and Weaver is our partner.
Okay.
That's exactly what we are working with.
Excellent.
Yes, of course. I mean, everything has to be under the regulated framework. Yeah.
This gentleman here.
Tell us about your cybersecurity protocols under SSV Pay.
Okay. Nidhi, do you want to take it?
Sure. So our cybersecurity policies and all is within the SSV. So all our data or communication that happens within the servers are completely encrypted. We do not store any personal information like card or sensitive information, I would say, like card details or account details and all in our systems. So I would say we are pretty much secured and utilizing the securities of other platforms also, like AWS as our server, cloud server, which is pretty much secured. So yeah, so overall we have our own policies as well as we rely on the policies of the partners from a security perspective.
But more importantly, I'll be very honest with you, we may not be the right people because we have our Chief Data Officer. I mean, we have got wonderful non-executive director team. Please have a look. David Lewis, he's one of them. He's also looking into it. So in terms of the cyber security, we take that as a challenge. But again, she being the head of corporate development, me being the founder and CEO, we overlook it. But again, deep inside, these are the people who look into it. We also work with a company known as DotSquare, who are given this kind of task force to actually implement and look for it. But again, look, cyber threat is a big threat for any organization. Data is the new gold. So obviously we don't want to do it. But again, we have people behind it reasoning it. And I mean, the regulators we comply on, they also have to have knowledge of how we are doing it. And these are the specific departments who look into it.
Any other questions from the audience? I've just got time for one more question from me.
Yes, sir.
So are you looking to IPO yourselves or by merging with an existing quoted company?
Oh, wonderful. We are listed at the moment on JP Jenkins, and the reason was mainly because of liquidity. I was taking the concept of going on Aqua Stock Exchange, if not on AIM. But again, after understanding, I thought JP Jenkins was the best secondary platform, fully regulated, and at the moment, for a free float or liquidation, that was the best thing we could have done. But yes, we are looking into IPOing, but let's get the consolidated statement a bit more dramatic in 10 or 20 or million, and let's do it together.
Excellent. Thank you very much.
Thank you, sir. Thank you.